Welcome to FinTalk. In today's episode, we're talking about all things audits, but from the auditor's perspective. Today's guest is an auditor with plenty of experience from the private sector and the public sector. Saif, Assalamu alaikum.
Alaikum assalam wa rahmatullah.
Shak Barik.
Alhamdulillah, how are you?
Alhamdulillah.
Thank you.
How was that?
Perfect.
There we go. There we go. So I really need to work on my Arabic. That's something that I know I need to.
Don't worry about it. You'll get it right in some time.
Inshallah.
Inshallah.
Inshallah. I'm super excited about today's topic.
Likewise.
For me, auditing is one of those things where I actually really considered going into it, ended up going into consulting and so forth. But I've always found it to be really, really interesting. Tell me about yourself, who you are, how you got into auditing. I really want to know about your journey.
Yeah, sure. Thank you, Ivan, for having me, and I'd like to share my experiences with you. So to start with, I've always loved numbers, accounting. I remember doing my A-levels in accounting, and then I wanted to continue that. I end up doing my undergrad also in accounting, and then also my post-graduation was in accounting as well.
Really?
Yeah, so then I joined the Big Four company. Stayed there for quite some time, actually 6 years.
Big Four.
Yeah, time flies.
Especially when you're having fun, right?
Oh, yes, that's interesting. And yeah, during my time there, I got my CPA license, and it's been an interesting journey so far.
Amazing, amazing. So you're a proper auditor through and through, as in your academic background is accounting, deep accounting, and again, deeper accounting.
Right.
You went into the corporate world, Big Four, and focused really in auditing.
Right.
And you've also got a few ventures that you're involved in as well, correct?
That's right. I'm also a partner in some of the ventures that we have. I focus mainly on the financial aspects in terms of bookkeeping, financing, and all the stuff that relates to, accounting and finance, basically. And it's been an interesting journey and a learning experience so far.
That's really interesting. Today we're talking about auditing, of course,
right.
And I really want to have the conversation focusing around a few things. First of all is the problems that we've seen in the region in terms of financial positions for different businesses, auditing, what goes well, what doesn't go well, the even better ifs. I want us to take a deep dive into these, right? Mm-hmm. And really showcase how to improve not auditing specifically, but the financials for the SME space, right? For you, what are the main issues that, as an auditor, you tend to see for the businesses?
See, the main issues that we see mostly incorrect postings in terms of financial bookkeeping. So this is like one of the most common issues. Could be also a misapplication of the accounting standards. So that's where
referring to IFRS
or US GAAP or some special frameworks. So it could be like the clients, they apply the concept incorrectly, and that's where we step in as auditors to guide them and provide insights of how to enhance their financial records. So yeah, I would say that the main issue that we notice quite often is incorrect financial postings.
What are the implications of that?
I mean, implications could be huge, especially if there are some incorrect postings in huge amounts that could have a ripple effect throughout the company, the industry, and even the economy as a whole. We've all seen examples of public companies going under.
Yes.
Yeah, and especially here in the region and in the country. And that's due to poor financial governance and poor bookkeeping.
So two main things, poor bookkeeping and poor financial governance.
Yeah.
Let's talk about financial governance. What are the trends that you've seen over the last, few years and so, in terms of financial governance? How's that improved, especially with the implementation of VAT in the last few years, and now with corporate tax coming in soon?
See, the lack of a proper financial governance structure was in most cases the root cause for all of these issues that we see. Companies lack proper oversight committees, and I'm gonna repeat this word also on the podcast, the tone at the top, which is very critical for every organization. Like that cascades down. So having a proper governance structure, ensures that the ethical behavior is executed properly throughout the organization, and that will help the financials in terms of everybody has an expectation and everybody has an objective in terms of ensuring that whatever they do has to be in accordance with the
objectives
of the company. Exactly.
Yes.
Exactly.
So it's a case where, as a business, you need to make sure that whatever is recorded or done for the business is aligned with the business objectives, and not allowing personal bias or wants and needs to be involved.
Of course,
right?
of course. Like even the board members, they have that fiduciary duty to act on behalf of the best interest of the company, because they're entrusted by the shareholders.
Absolutely.
So that's why. And just moving back with the introduction of the corporate tax law, so this financial governance is much more important now than ever before. The corporate tax requires annual audits, and from a compliance perspective, every entity must ensure that their numbers are audited and are accurate at the same time.
That's a big difference, right? So let's talk about this specifically. There's going to be a very clear requirement where every company needs to be audited.
Right.
But you're audited, but you need to make sure that your numbers are an accurate representation of your financial truth.
Obviously.
And we already identified there's two key problems: poor accounting and bookkeeping, and poor financial governance.
Right.
Do you have examples of what you've seen in your experience of poor bookkeeping and poor financial governance when you're going through and performing an audit?
Yes, I mean I've experienced some companies that due to the poor governance and not having a proper financial bookkeeping, it affected their investments, their valuations, and all the because especially I've just sharing an example. During one of my audits of a business, we've noticed unusual amount of key management personnel compensations.
Interesting.
Yeah, so their bonuses were very, very high, and that was a red flag to us. So upon further investigation, there were like some wrongdoings, misrepresentation of some numbers, and they would basically obtain a verbal approval from the board. Okay, they sign off on their bonuses. So this stems from the lack of proper oversight. The board members, they don't execute their duties properly. So that's a proper example of a poor governance structure, how it leads to a misrepresentation of numbers in the financials.
Every single time I hear of an example of a business that goes through that, I'm in shock, and I know you are as well. Is this something that you see happening quite a lot?
I mean, see, at the end of the day, management are under pressure to meet KPIs and targets. So in order for them to do that, the easy way is just to forge the numbers. So by forging the numbers, they could easily say, okay, we achieved the target and it's done. So that's where we see, okay, lack of proper oversight, and basically reflects the tone at the top.
And what stops SMEs from getting this right, getting the right governance structure in place?
So I would say that the main barrier for this is majorly from the cost perspective. Many SMEs are founded by individuals who are not so accounting savvy, I would say. So they would purely focus on the operational side of it and just forget the financial side of it. So, and they should know that operation and finance, they go hand in hand,
Yes.
you know? So, I mean, I always say that the CEO and CFO should be at the same level. Every decision by the CEO should be approved by the CFO,
Preach.
because he knows if you actually have the cash to do that or the finance to do that or not. You know, so what stops the SMEs from doing that is mostly cost perspective and lack of awareness. You know, I see it as, you know, the biggest challenge is not with the technology, it's rather with the mindsets. You know, so the leaders, they when they realize what they're missing out on, they act fast.
I'm speechless with just this statement alone because it highlights such a massive issue that we've seen across all industries, which is when the mindset at the top doesn't align and isn't, you know, accurate, it cascades down, just like you said. Right? When the CEO and the CFO are not aligned and the SME in particular is focusing on sales, operations, and they completely ignore finance, what are the biggest mistakes that you've seen happening that were, of course, related to poor bookkeeping and poor governance?
I mean, the mistakes like improper valuation of investments, and so just a few examples to mention. Lack of proper filing with different regulatory authorities causes them to have some penalties and some fines, especially when there's lack of oversight. For example, if companies incorporated in the different free zone, they have some reportings to do.
Yes.
Once they miss that, you know, so that's when, you know, problems occur. Okay, why have you missed? Okay, penalties will be incurred, and so on and so on. So, I mean, at the end of the day, going back to lack of oversight from the leadership.
And that's a case where leadership is very good at selling and delivering the product that they do,
Right.
but they don't have a trusted person or partner that supports them with their finances, right?
Right, obviously.
How does this impact shareholders?
Shareholders
or
and
stakeholders?
Stakeholders actually would say that especially now with the tax filings, so I mean the government could be after you. If you don't have a sound financial bookkeeping system, your numbers must be audited, and I mean, the implications of not having a proper financial record keeping could impact also the banks, because banks are important stakeholders. I mean, most of the private companies, they are not required up until now to do an audit, but why they do it is because they have some loans from the banks, and they need to focus on, you know, maintaining the covenants with the banks. So if they don't have a good bookkeeping system, then I mean, these covenants would be easily breached.
Yeah, absolutely. And it goes above bookkeeping as well, right? Because if you have poor bookkeeping, you're going to have poor accounting.
Right.
If you have poor accounting, you're going to have poor finance. If you have a poor, you know, finance function, you're not going to be able to do your FP&A, your actual reports. And what I've found quite often is a lot of businesses don't even understand if they're profitable.
Exactly.
Right. And you mentioned a really interesting point, which is misrepresentation of numbers, and, you know, misrepresentation of assets is a huge problem, right?
Yeah.
Where you don't comply with, you know, IFRS, which is usually what we follow. And, you know, your assets aren't represented accordingly, or your inventory is overstated, which makes your balance sheet look a little bit different to what it should. Right now, without corporate tax,
Yeah.
not every business goes through an audit, and if they need to go for an audit, it's because they have some loans, just like you mentioned earlier.
Right.
Going forward, is every business going to need to do an audit?
Yes.
If you do an audit, you get to pick your own auditor.
Right.
What differentiates from now what's a good auditor and what's a not so good auditor?
From an auditor's perspective, I see it as where I can provide value added to the client, where I could help him grow. And here I see my opportunities as an auditor. Whereas on the other hand, from the business side, they see it cost-wise perspective. Wherever they get the cheapest or the good price, they would go with that auditor. But I don't recommend business owners and SME owners especially to go with the cheapest. Select the auditor who will add value to your company and will fuel your growth. So I see it as we as auditors, we're not here to catch mistakes. We support your growth. Your growth is our growth. Your prosperity is our prosperity. That's how we see it. By having reputable clients also bolsters the auditor's portfolio. So that's how we see it as an auditor.
I think this is the first time I've heard that from an auditor, and it clarifies so much in terms of what does an auditor do, right? And just like you mentioned, adds value, not there to catch mistakes.
Right.
From an SME perspective, at the end of the year, they close the year and they need to be audited, and they've decided we're going to go with the auditor that is good at what they do. What kind of value do they get from making that decision?
Ultimately, when they go with the value added auditor, they would probably reap benefits more than the financial side of it. Like the auditor will guide them into how to have a proper governance structure, on how to, advise them on certain investments, what's good, what's not working, because we look at the numbers and we see the markets and we compare it with them. So we advise the clients on that, and also on the issue of internal controls over the financial reporting. So at the end of every audit, what we do is we're not obliged to provide control deficiencies or significant issues that we noted with the internal controls. It is not mandatory for SMEs, but I mean, as an added value, we always recommend new ways to improve their internal controls as well, which also helps boost the financial bookkeeping of that company.
Do you have any examples of improvements that you've recommended following an audit?
We've noticed some companies, they have a sophisticated bookkeeping systems, but they are not using it to its full potential. Yeah, so like that's the most common scenario that we see across the SMEs. They have, like, let's say Oracle or SAP, but they're barely using, I would say, 10% of it. So, I mean, this also goes back to the lack of proper mindset as well. And then I remember, for example, one client, we suggested using that software basically to assess the creditworthiness of their clients before taking on new sales. And I remember, like, we saved the company few thousands, I would say more than 100,000 on just basically,
Just creditworthiness
yeah,
checks.
just creditworthiness checks.
Interesting. So, as an auditor, and I think this is something that most people don't realize, is the benefits of going with a good auditor and identifying those issues that internally they had no idea could have been, readily fixed.
Right.
What other technology have you seen that have really helped SMEs both during the audit or ahead of the audit?
I mean, having first of all, good accounting software helps any auditor, because from an auditor's perspective, if the businesses they have a sound accounting software, then we as an auditors, we can place reliance on those systems, especially if it's integrated with the internal controls of the company. If the company has a good internal controls, specifically ITGCs, which is IT general controls. These controls feeds into the financial bookkeeping. So if that ITGC is good and sound, then we as an auditor, we could rely on those, and in turn, reduce our sampling and focus more on other areas of the audit. So it's much more efficient, I would say. And just to name few solutions that from what I've researched in the market, Finalytics is one of the, probably if not like the best tool for every SME, I would say, because it gives an overview to the non-accounting background, specifically on the operational side of how their business is doing, gives them accurate break-even, profitability analysis, and financing capabilities, their cash flows. Because what's most SMEs, they're unaware of their cash flow. Is their cash flow good or not? That's why, like, I remember in a few of my ventures, I get approached by the CEO for some projects that he needs to participate in, but then I was like, okay, I look at the numbers first and then I get back to him if it's green or red, so operation and finance, they go hand in hand, and that's how we see it.
First of all, really appreciate that. Appreciate the kind words.
It's not an ad, honestly.
No, it's really appreciate that. I'm not sure if the camera caught that, but I think I was blushing at some point. Got me speechless. Thank you.
Seriously, man, good job.
Appreciate it. One of the things that we really focus is mindset internally, right? Making sure that every decision that we make is focused on having the right people and the right technology to impact the client in the best possible way. As in, from day one, hit the ground running, adding value, which is one of the main things that you've mentioned today. So with that in mind, one of the main things that we've spoken about is, of course, people, mindsets, and taking the right approach. What happens from an auditor perspective when technology isn't used properly?
The main issue is it leads to inefficient audit. We go back and forth, and the audit keeps dragging a lot more than intended. Lack of proper technology hinders the audit, I would say.
And it makes it more expensive as well, doesn't it?
Obviously, because of overruns are expected.
What type of overruns you see, or how long or how much longer do they take if the right governance isn't in place, the wrong mindset is there, and the technology is just completely underutilized?
I will answer that by sharing an example.
Please.
Yeah, of an audit client that I had. So now we are currently in 2024, and we were the auditors of 2020, 21, 22 up until recently. We closed the books. We issued the report in September 2024 of 2022 financials.
No way.
Yes. So I mean, the issue is it's
Sorry, I'm gonna have to like pause you there. You issued the financials of 2022 in September 2024.
yes,
How?
because of poor governance, I would say.
Okay, for someone that isn't a finance person, what does poor governance mean in that specific example?
Basically, new management comes in. The board is ineffective. They don't demand the financials. The accountants are lazy in providing the supporting that the auditor is requesting. So, all of these issues, they combine and drag the audit much more than expected. Much more. There is no pressure from management to close the books, to have the financials ready, and everybody just slacks.
There's two sides of that as well, which is, new management, poor accountants, and yes, maybe you're saving money in the short term with cheaper resources, but at the end of the first year or even at the end of the second year, your cost to fix the mistakes of the last 2 years are going to be bigger than if you had just done it properly from day one, right?
Exactly. So, once the leaders, they realize, okay, how much we could have saved, instead of dragging this a lot further, they would have acted fast. But they don't realize that the savings that they would have if they made it much more efficient. And I mean, efficiency could come in by implementing technological solutions. Like we're now in 2024, and I don't expect anybody to do, manual bookkeeping.
You say that, but the amount of times that I've seen, and I'll give you an example now.
Yeah, sure. Go ahead.
You might see a lot of pain in my face right now. The amount of times I've asked for a P&L and I'm given a spreadsheet with 200 tabs, with multiple reconciliations that just don't make any sense, no supporting documentation, no ability to drill down into a specific ledger. Absolutely insane. And in 2024, that should not be the case.
Of course.
And every single time that happens, and it happens a lot more than what we expected it's painful. But it demands another side of the business, which is we've identified a huge problem here, which is not just the lack of digitization, it's the inaccuracy of your financial position because you don't have supporting evidence as well.
Right.
Therefore, your balance sheet, which is what most people tend to ignore when they're looking at financials, because when you're not a finance person, you think, yeah, let me look at the profit and loss account.
Exactly.
And you think that's it.
That's not the case.
It's not.
See, the main difference here, P&L gives you throughout the time, over a period of time. Whereas a financial position, it's at a certain point in time, gives you, okay, what are your assets, liabilities, how much you owe, So I encourage everyone to not only focus on the P&L aspect of it, but also focus on the balance sheet and most importantly, the cash flow, especially for the SMEs.
Brilliant. When it comes to additional advice for the SMEs, for the business leaders, you've highlighted an amazing point, which is don't look just at the P&L, look at the balance sheet and look at the cash flow, and then you'll get an accurate representation of the business's financial health.
Exactly.
What other advice do you have for the SMEs?
I would recommend every SME to engage with external auditors.
Even before the audit starts?
Even before the audit starts, give them business updates. Tell them what has changed this year and what will be the plan for the coming year. And also, this gives an auditor much more understanding of the business. Because in every audit, we start in the planning phase. Understanding the business is vital. We need to see your contracts, your minutes of the meetings, review them and see what has taken place, what has been said, what has been discussed, So this all helps the auditor, to have some sort of sense of business understanding much more. And by doing that, the auditor could add value to the audit, see what this company's focuses on this year, and then suggest some action plan. So the second thing is, don't be afraid to consult or seek guidance where you need. We as auditors, we're here also to help you. We're not only here, to catch your mistakes, as I said, As you grow, also we grow.
Amazing. As we're talking about advice for business leaders and the SMEs, as you mentioned, not all of them have, a financial background. So they won't understand the P&L as well as they potentially could a balance sheet or a cash flow statement. Can you briefly explain what each one of them is and how a business leader should look at each?
From a auditor's perspective, understanding the main three elements of the balance sheet, of the financials, the P&L, the balance sheet, and the cash flow. Obviously, there is much more to that in the financials, where you have to look at the notes and disclosures and changes in equity and all of that. But I would suggest to them focus on the profitability. Look at your sales, look at your cost of goods sold, gross profit, and then net profit margin. Having these numbers in mind, helps you assess, okay, because these numbers from the P&L, they feed into the balance sheet. Ultimately, the net profit would feed into the retained earnings, the balance sheet. And then if you look at the balance sheet, it helps you assess your liquidity position, your leverage position.
What's that?
Liquidity position is basically ensuring that you have enough cash to support your working or operation. Just ensuring having enough working capital. If you don't have that, then okay, there is a red flag. Coming up. I might
Absolutely.
need to take additional loans, or I need to find other sources of finance. So the balance sheet helps you, and basically it diagnoses your health, the financial health of a business. From an investor's perspective, we also the investors looks at the financial position, which is the balance sheet. It helps them, assess so many different ratios, from the current ratio, quick ratio, which is part of the liquidity ratios. Then you come to the account receivable turnover, see how long do you collect your money, and then you go to the account payable turnover days, how long does it take you to make your payments, and ultimately you want to ensure that you're getting your money fast and delaying your payments. That helps you solve this liquidity issue. And ultimately, at the end of the financials, you need to know the cash flow position. So that's done by having a look at the cash flow. And the cash flow has three elements to it: the operation, investment, and financing. Operation sees where you spend your money on in terms of purely operation side. What has been paid, what has not been, what has been collected. And so this affects the operation. And I see the trend and this is normal, that for startups and SMEs, they have a negative cash flow from operations. And that's because they're in the growing phase. And that's common. Also, you would see that in investing element, which is if you have a investing element, basically what additions in terms of PPE, property, plant, and equipment happen during the year. Obviously, as the company is in the growing phase, they would buy and acquire more assets. So that would be negative, and that's understandable. And then you move to the financing element to it. Where have you gotten your money from? Have you raised more capital? Have you paid out dividends? So all of these they need the SME leaders need to keep them in mind, you know, and understand each element separately. So yeah, these are the main things.
I don't think I've ever heard such a clear explanation of the three main, financial statements in my life. So
Thank
that
you.
was incredibly put. And you still went into quite a lot of detail, which even a finance person would say, that's a brilliant point. And the non-finance person say, that makes perfect sense. I now know to look at the balance sheet as opposed to just the P&L, which is the green tick, right? As an auditor, you give opinions. This is a big part of the auditing process. So you've completed an audit. What are the different types of outcomes?
See, to begin with, we as auditors, our job is to provide trust. Trust in the markets, trust in the economy. So the expectation on us is huge. Everybody relies on the audit report.
Yes.
You know, in terms of different stakeholders, banks, government, investors, shareholders, everybody relies on that one.
We rely on the audited accounts.
Exactly. So that's why the element of trust is important and integral part of an audit. During an audit, once the audit is concluded, there are four main types of audit reports that issued. First one is unqualified, which is clean opinion, we would say. The financials are like we give them high assurance that the financials are clean and good. So we don't give an absolute assurance because that's frankly impossible, you know, but it's a high level of assurance. We move on then to a qualified opinion. So the qualified opinion is issued if there are some misstatements or misrepresentation in numbers and it's not pervasive.
Pervasive, yes.
Pervasive, yeah. And it's not pervasive, then we issue qualified opinion. There is a misstatement. The misstatement is huge, more than the materiality threshold. And so let me just rewind back a bit. So before issuing the unclean opinions, we go to the management, we work to the management, how we can resolve that. Because obviously the management would not accept unclean opinion, you know, they will not be happy with it.
Yes.
So we work with them on how to resolve this issue. Firstly, we propose some adjustments. If they consider those adjustments and took action on those, then finish, okay, we adjust the books, go back and tell them to clean the books and redo the financials. And then we issue the clean opinion, which is unqualified.
Clear.
However, if they don't agree with the proposed adjustments, then we issue qualified opinion. And then we move on to scope limitation, which is a third type of audit report. Scope limitation basically when there is a significant impact of us getting the supporting documents and evidences. Basically, for example, for one class of account, let's say account receivable, we were unable to get either the third-party confirmations, and we were also unable to verify the invoices or obtain them as well. So once we've exhausted all of our alternative procedures, then we say, okay, there is a scope limitation, and for this class of account, we do not express an opinion. It could be either on a class of account or on the whole financials, depending on the pervasiveness.
And this is the worst case scenario.
This is the third one, not the worst case yet. It's one of the worst, I would say. And then we will have the adverse opinion. Adverse is the worst, actually.
Okay.
Adverse, where the misstatements are huge and pervasive. So then we issue adverse opinion. And that's the nightmare for every organization. And frankly, I've during my period or experience in the Big Four, we've barely seen adverse.
But that's because, first of all, Big Four, so there's an immediate setting of standard of the clients that you get in the first place.
Yeah, definitely.
And then secondly, they reach out to you throughout the year. They use the auditor as a partner to ensure that they've got the right governance, the right tools in place, the right approach.
Of course, definitely.
As we go to 2025 and as corporate tax is arising, we need to make sure that businesses do not get a adverse opinion. What type of things do you recommend for businesses to really focus on?
First of all, I would encourage mostly SMEs, because large companies have already well-established financial systems. But I would encourage the SMEs to engage again with the auditors, with the consultants, adopting. There are tons of accounting solutions out there in the market. Many tools that everyone could use it, frankly.
Yes.
It's just plug and play software. Off the shelf software could be used easily. Just have those. Go engage with your accountants. Engage with your financial experts. There's no shame in having a service organization providing you third-party accounting services. Get those on board. Let them fix your numbers. Get your numbers clean. Get your financials in a good shape. And then ultimately that will be in your own interest as well, and best interest. Because based on those numbers, you would be able to make effective decisions. Either it be tax efficient decisions or operational decisions.
Saif, really appreciate your time.
Thank you.
This was super enlightening. Really enjoyed talking about auditing.
Likewise.
Which is a topic that for most people, it's a scary topic. And you've simplified it while keeping a certain granularity of it as well.
Right.
Really do appreciate it. Thank you so much for your time.
Likewise. And just to conclude, I would love to say that the future belongs to those who adapt. So if you're not flexible and your systems are not flexible, then your business is not either.
Beautiful.
Thank you, Ivan, for having me, and it has been a pleasure to have this conversation.
Pleasure's all mine, Saif. Thank you so much.
Thank you.
Thank you.
Appreciate it.